The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien coming to you live from TFNN Monday morning, 9:06 a.m. We got 24 minutes to go until the start of trading, and markets picking up right where we left off last week. We got negative action in pretty dramatic fashion. Markets accelerating to the downside beginning really at about 6 a.m. this morning. You look where we were in the S&Ps, you're trading at a price point of about 46.65. You back it up to where we were on Friday. We were within about a few points. You were actually higher at one point at about 3 in the morning last night. You were in positive territory up until about 5:15 a.m. You see the acceleration. You're talking about trading down 40 S&P points over the span of just under 3 hours. We reach a low of 46.33 within the last hour, and we've just been chopping around at the lows pre-market, 46.38 in the S&Ps. Nasdaq 100, you're talking about another 1.25%. We accelerate lower. Now, I take a look at the Qs real quick. I've been talking about these trend lines for a while, and man, we finally made it to the bottom of that trend line. We're trading in the Qs at 375.15. You see, on a 15-minute basis, the trend line we're talking about, I'm going to back this out so you can see how important this trend line will be. The upper boundary, you're talking about 407. Lower boundary, 375. You back it up, and I want you to see the full run of that trend line. You're going back almost, folks. What is that now? 15, 16 months ago, this trend line began. Yes, we've made it over it, or maybe a hair under it on a couple occasions. But as you see, the last time we touched this trend line, you're talking about 3 months ago, beginning of October, and man, that began the acceleration for the final quarter of 2021. Not sure that's going to be the case this time. Excuse me, but as you can see, an important area as the Nasdaq 100 bumps up. Now, I pulled up the 15-minute first because on the daily, we haven't yet registered today's action. If you pull up where we are, you are literally at the trend line on the Qs to kick things off on a daily basis. There you are, going back like 15 months. S&Ps were actually below that, to the tune of about 30 points. We were ticking around at that trend line before the acceleration this morning. You put the S&P back to see that trend line, a little bit of different action. That one, you can almost take it all the way back to the COVID lows, the trend line beginning in April. And yeah, we've had some volatility, maybe a hair above or a hair below that trend line. But as you see, every time we've ticked either below or above, using a little bit of maybe linear regression on that trend, the market has popped or pulled back to keep that trend line intact, but we're pushing an area right now where you will need a bounce in these S&Ps or that channel is gone. Dow only negative by about 0.2% right now. Dow, you see, actually above where we were trading at about 8 in the morning, let alone above where we were at actually last night at about 36,000 in the Dow. Russell, negative by 11 points, 2164. Bitcoin this morning, almost at 40,540. Bitcoin with a real moment of clarity test. We pull back the whole move that you got from September. This is a weekly. You run up to 70,000. We give it back to 40,000. Going to be a critical area considering this is where the run began last September. We've now given it all back. If you were a purchaser of crypto in the final 3 months of 2021, then you're a loser right now as you are under those price levels. Commodities, crude, 78.70, back to a daily. You got crude right now trading at 78.70. Yes, that is the bar for the 10th. You have the gold contract negative by $5 at 17.91. And we jump to the all-important notes and bonds this morning. And guess what, folks? We are getting lower price and higher yield. That is correct. Let me pull this one over here. Lower price, higher yield. I kid because that is the trend, man. Look at the way that this 10-year has traded. 1.8%, folks. 1.8%, just like that. There is where the calendar year began. We are 6 trading days into the year, and we have gained 30 basis points in the 10-year. You started 2022 off at 1.5%, and right now we're at 1.8%. And we're at 6 trading days in. Remarkable. We jump over to the Vix Volatility Index. I mean, all things considered with how the market is trading right now, you could say not that bad. As in the VIX only sitting at 21. You got the market in a real sell-off position. Now, the one thing that has kept the VIX from spiking to the area of 27, 28, 35, something like that, is that it's predicated off of the S&P, not predicated off of the Nasdaq, where the real carnage has been. Speaking of, let's jump over to some of the Nasdaq stocks. You got the Nasdaq 100 down 204 points. That's 1.3%. You're going to have the FANG stocks in negative territory probably. You got Apple shares down $4 almost, $3 and a hair, we'll say, to 168.91. So much for $3 trillion. That was a short-lived experience, as you are now, a solid $15 below that price level. $15, you're a solid $200 billion almost below that $3 trillion market cap. Apple pushed about 16 plus billion shares, $15 below that price level. We jump to Microsoft, man. You talk about some pullbacks. Microsoft, you're going to open down another $5. You back things up just for some context to get the highs in there. You're talking about $345, just like that. We give up $35 in the price of Microsoft. I'm pretty sure we have a high there actually of closer to $350. Yeah, $349.67. High back in November. And we go back, and you're talking about the high from October 6th, $312.40. So we've filled that entire gap now. We filled that gap actually back on Friday as well. We're going to open at $309. Let's back it up even a little bit further. Yeah, I mean, you are right back to the area basically from August, which is remarkable. You're talking about a high of 305 and you're trading at 309. Really remarkable how quickly the market gives back so much. And, I'm not saying that we're going to make it down to 260, folks, but you better believe it's possible when we're only $50 away from 260 and we just gave back $40 in the span of about 8 trading days. In Microsoft. Salesforce, man, these growth stocks just got pummeled. Salesforce going to open down another $4. You talk about giving it back. Salesforce trades from in May 210 to 310, and just like that, we're going to open at 224 for Salesforce. These growth companies, man, watch out. Roku from 490 today, we're going to open 175. The run just does not stop on these folks. Be careful out there. Remarkable when you look at Roku now back to 2019 prices. Didn't think it would happen. Did not think it would happen on many of these equities. Peloton going to open potentially with a 34 handle. You were trading at 37 in 2019 for Peloton. You're going to open at a 34 handle. Now, Peloton, I will say, folks, it might be an area that you could dabble in a long-term position because I started off Peloton being a huge bear. They've cemented themselves as a fixture in households for the future. The multiples they were dealing with at 170, at 120, at 100, at 80, at 60, obviously not deserved for this market, but they will be around, and I imagine that maybe at some point, right now you're talking about a company, for some context, in Peloton, valued at $11 billion. You were pushing $40 or $50 billion, right, when you were up to 170. $11 billion might make a little bit more sense for this company. They became a worldwide phenomenon. Did not capitalize in the way that the market thought they would, but nonetheless pulled back to 2019 prices. Zoom going to open at 168. You were trading at 107 in 2019. 168. Remarkable pullbacks across the board. It's going to be a wild week, folks. We got quite a market. We got 15 minutes to go until the opening bell. Stay tuned, folks. We got the Nasdaq 100 down 205. S&P's down 32. We'll be right back in 3 minutes. Stay tuned.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
What's separating you from the most successful men and women on Wall Street? That's right.
information. Having all the information gives us the perspective we need to place the right trades at the right time. The TAS Profile Scanner is the premier market profile-based scanner. Powered by its acclaimed TAS proprietary algorithms, this feature-rich scanner instantly filters over 2,500 plus global financial markets, such as stocks, ETFs, commodities, futures, and Forex. This powerful suite of tools leverages instant trade filtering and strategy formulation to show you emerging trades before they happen. For a limited time, you can save $100 off your first month by using the promo code UPGRADE, and you still get a 30-day money-back guarantee, so you have nothing to risk. Level the playing field with the TAS Profile Scanner, which you can find under the Services tab at TFNN.com. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
All right, folks, we got markets escalating even further. We're talking about pre-market session lows right now. S&P's down 34 points right now. You got the Nasdaq down 215, Nasdaq 100. Dow off only 0.2%, off 97 points. You got the S&P's down 0.75%, Nasdaq 100 down 1.4%, and the Russell down about 0.6%. Man, jumping over to the Nasdaq 100, putting this thing on a daily, you're talking about highs 16,767 back in November. We were December 28th talking about a price point of 16,659. Folks, we've given up 1,300 points in the Nasdaq 100 since December 28th. For some context there, you're talking about 1,600 points, 10%. You're almost at 10% in the span of, what are we talking about? 3, 6, 9 trading days. 9 trading days. And if you think this is the end of it, okay, and it may be, but you have to realize in situations like this that you think that, man, we've pulled back almost 10% in the span of 9 days. If it was that easy, folks, all the buying would come in. All the buying's not coming in. You're seeing sell-offs every single day here. I mean, for some context here, the NASDAQ 100, we just put it on a 10-day, 30-minute. I can't find a bit of acceleration there at all. Now, coming into the new year, there was just some general complacency sitting near all-time highs. Monday started things off with a little volatility to the upside, and Tuesday the carnage just began in a big way. And you got one sell-off on Tuesday, one big sell-off on Wednesday. Thursday we bided our time for a while, and Friday the sell-off at about 10 o'clock. And guess what? It continues this morning. So until you really get a bid, be careful in this market, and don't be afraid if you have retirement money out there or something like that. To think about lightening up even at these levels, folks, because, context is very important here. That is a chart of the NASDAQ 100 of the last 2 years. You want to see it even crazier? That's a chart over the last 5 years, all right? Now, 2 years really is the craziest part of this because you came into 2020 at a price point of 8,600. You're sitting at 15,378. Be aware of that, folks. You want to be in for the long haul, you'll probably be all right. If you have retirement money that you're going to need in the next 2 to 3 to 5 years, it's very real here that we accelerate down for a year. We chop around for a year or two. We just had quite acceleration that, you're talking about, I did the stats last week, since 2008. Okay, so you talk about 2009 all the way through to 2021. That's 13 years. We've only had one negative year in the market. That negative year, I think it was 2018. at negative 4%. So you've had 12 out of 13 years in the positive. And that is accelerated to the fact that we just got 2 years that are some of the biggest returns out there, combined with the fact that you got 27% last year alone. 27% at the end of a 13-year run, as in every year that you keep going, if it accelerates, at some point you have to get some type of calibration in this market, and you're seeing it right now. And with that in mind, why are we seeing it? Let's go to some of the headlines. Goldman, how about four rate hikes? 4. Goldman now expects 4 Fed hikes, faster runoff in 2022. I imagine they're not alone in how things have accelerated this year so quickly. Federal Reserve will likely raise interest 4 times this year and start its balance sheet runoff process in July, if not earlier. Rapid progress in the labor market and hawkish signals in minutes from December 14th, 15th open FOMC suggest faster normalization. That's Goldman's Jan Hatzius. Said in a research note, we are therefore pulling forward our runoff forecast from December to July. That's quite an acceleration, with risks tilted to the even earlier side. This is important stuff, folks, because these are the risks the market has definitely factored in. It's your job as a trader or investor to figure out where you fall on your own personal opinions on this one. My opinion is they're getting it right. And all the risk is to a faster acceleration here. When you look at an unemployment rate of 3.9% and inflation going bonkers, folks, I don't have to be a genius to tell you that the unemployment rate's at 3.9%, inflation is going bonkers, and the Fed might have to raise interest rates with that scenario. With inflation probably still far above target at that point, they're talking about July, we no longer think that the start to runoff will substitute for a quarterly rate hike. We continue to see hikes in March, June, and September. And guess what? They're adding one in June and December now as well. So they got 4 in December meeting minutes. Fed officials signal they're preparing to move quicker than the last time they tightened monetary policy in a bid to keep the U.S. economy from overheating amid high inflation and near full employment. Officials also saw the timing of reducing the $8.8 trillion, you heard it right, trillion, dollar balance sheet as likely closer to that of the policy rate liftoff than in the committee's previous experience. Yeah, unemployment rate under 4%. Goldman's forecast for the terminal funds rate is unchanged, 2.5 to 2.75. Even with 4 hikes, our path for the funds rate is only modestly above market pricing, but the gap grows significantly in subsequent years. Excuse me. Yeah, folks, maybe that's what the market's paying attention to this morning. Maybe that's what it's been paying attention to for a while. Now, the only reason I shrug is that, that's dated last night at 9:50. I told you overnight you were actually positive. So not like this news is a shocker to the market this morning, sending it lower. The market's well aware that there's the propensity for faster tightening, which is what's causing such a little tantrum right now in a big way. Market does not like the term taper tantrum, folks, but I don't know what you call going down almost 10% in the span of 9 trading days in an index like the Nasdaq 100. Let's keep jumping around some of those FANG stocks. We didn't get to Google yet. Google going to be down about $40 on the open right now. You jump to Facebook shares. Facebook down about $6 to $3.25. Let's see how Netflix is trading this morning. Netflix down as well to $5.35. All right, let's jump around to see what else we have going on. We got a couple companies with earnings this morning, and we got a couple companies with acquisitions. How about Take-Two? They're going to buy Zynga for $12.7 billion. Not bad. Take-Two Interactive, they're going to buy the Farmville creator. Remember Farmville? I don't know. I guess is Farmville still around? I'm not sure. That was a big one when Facebook and gaming was first accelerating for social gaming. Take-Two's going to acquire Zynga for $9.86 a share. Not bad. 64% premium to the close of Friday. And yeah, as you'd expect, Zynga up dramatically this morning. Latest blockbuster acquisition in a string of major deals in the video game industry, $12.7 billion. Take-Two said Zynga shareholders are going to receive $3.50 in cash and $6.36 in Take-Two stock for each share of Zynga outstanding. Now, what is Zynga? ZNGA. There's a nice pop for you. Now, here's what's crazy is you end the day at $6 on Friday. You get $3.50 back, and then you get $6.36 in the new share. So you get $3.50 in your pocket, and you still get 36 cents of profit in the share that you have on top of that. Quite a nice deal, of course, when you get purchased. Take Two, let's see how they're doing. Yeah, lower as you'd expect to the tune of 165. You're down like 10% this morning on that news on Take Two. Best known for Farmville, Zynga, Flourish. Yeah, initially flourished on Facebook, at one point becoming the most successful app developer on the platform. In the years since, they've turned its focus to mobile, hoping to capitalize on the explosive growth of the smartphone era. Let's pull this up, though. Zynga, Z-N-G-A. Yeah, there you go. Let's go even further. There you go, exactly. From $15.91 when they go IPO, it looks like in 2012, and they're getting out at about $9 and change. Stay tuned, folks. We'll be right back for the open.
Are you having fun trading the markets, but having trouble finding like-minded individuals to discuss your trading and investment ideas with? Become an apex predator in the trading markets and join the Tiger's Den Trading Room only at TFNN.com. The Tiger's Den is an exclusive trading room where successful traders from around the world come to exchange trades and ideas. Join the den and surround yourself with the sharpest minds in the trading world. Subscribers to the Tiger's Den are also the first to have their questions answered live on air and can privately chat with our TFNN hosts live during their shows. Interact with other Tigers and Tigresses as they share trading ideas, news analysis, and discuss the market action all trading day. Subscribe to the Tiger's Den risk-free with our 30-day money-back guarantee and become part of the TFNN trading community. TFNN, educating investors.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den Trading Room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got markets open right now. Markets in the red, as you'd expect. S&P's down 31 points, chopping around right where we've been since about 7:45 this morning. Nasdaq 100 opens down about 200. The Dow off 120. We jump to commodities, currencies. Bitcoin under 40,000, 39,705. We'll see how Bitcoin reacts, man. Whew, we might get a lesson real quick here, folks, in terms of you're under 40,000, okay? The low back in September, 40,085. Below that level, you're talking about price levels we have not seen since August, almost July. Man, I mean, it seems like 30,000 is the next stop, and you got two levels here in 30,000 from January and from July. Excuse me. We'll see where we go. But you break through that, 10,000's in play in a big way, because you went from 10,000 to 40,000 in the span of 3 months and the end of 2020. Crude right now at 78.92. You got gold down about $5. We're going to take this Bitcoin chart as an opportunity. We got a lot of equities covered. We got Crocs out there with some decent news. We got Lululemon. Why not? Let's jump over to these two real quick since I'm going to tease them. Lulu falling after the retailer sees fourth quarter earnings sales hurt due to Omicron. This stock's been quite a stock indeed. Lulu, you jump over. Quite a pullback though. November 15th, 485. This morning, 326. Just like that, folks. You give back a year and a half of gains in the span of 2 months. Remarkable. Down 7.8%. Now, Crocs restated on the positive almost, but they're down 2.8% with the market this morning. Crocs is out there. Fourth quarter sales up 42% is what they see. 2021 was an exceptional year. Yeah, we'll pull up this chart in a moment. Crocs said it sees sales in the 2021 climbing about 67%. More than it previously anticipated. For the fourth quarter, it's seeing 42%. They were looking for 36.6. Nonetheless, the market trading lower. Man, this market's just picking up too. You got the S&P's down 41, Nasdaq 100 down 249, Bitcoin 39,615. Keep your eye on the cryptos today, folks. I know we don't all trade the cryptos, but man, you might see some volatility because you're breaking below those levels. And with everything else going on, this is going to be an interesting one. Ethereum, 29.45. You're bumping up against the levels from September, which is 27.09 on Ethereum. Now, let's jump over to the crypto article I was referencing here. This is a cool one. If you get a chance to check it out on Bloomberg Wealth, the big take. World's biggest crypto fortune began with a friendly poker game. Now, the unfortunate part about this is that that's quite a tantalizing headline. When you read through the article, the poker game is just that he was playing poker with a couple guys that were big into crypto, and they said, hey, put about 10% of your wealth into crypto. You should do that. And he did. Nothing too, crazy. He was just around people who were in crypto. They said you should get into it. But what is amazing is this gentleman and the wealth and the company he has built. I'm probably going to just absolutely butcher this name. Changpeng Zhao, maybe I might have gotten that one, is closing in on tech titans, including Zuckerberg and Google's Larry Page and Sergey Brin. He's talking about $96 billion in wealth. Now, he might have been worth more when crypto was up at these price levels just as recently as November, okay? CZ, as he's known to cryptophiles, quickly becoming a fixture across the globe. United Arab Emirates, meeting with royalty in Abu Dhabi, eager to bring his Binance exchange to the country. Excuse me. Former McDonald's burger flipper, software developer. He worked in New York, worked in China, also worked for Bloomberg at one point. So it's a Bloomberg article for some context here. 44 years old, $96 billion. It's the first time Bloomberg has estimated his fortune, which exceeds Asia's richest person. And they actually say that to account his personal crypto holdings. I'm guessing, since this gentleman has changed the crypto world with the biggest exchange out there, that he may have some personal holdings. If he does, yeah, they're not worth as much as they were in November. But boy, I bet they could be, because you're talking about a guy who started this exchange. Now, you get into it. Binance generated at least $20 billion of revenue last year. $20 billion in revenue. That's almost triple what Wall Street analysts expect Coinbase, okay? And the Coinbase is worth $50 billion. So right away, this company is worth probably $150 billion, if that revenue number is right, just predicated on the multiples that Coinbase is getting. Coinbase might appear to be the 800-pound gorilla from a U.S. perspective, but Binance, and this one blew me away. Check out this chart. Now, if you look at Binance, is by far the largest crypto exchange by volume in both spot and derivative markets. Spot is in black here. Derivatives are in pink, okay? And this is talking about cryptocurrency exchange by volume. Derivatives, huge. You see where they're at. 80 billion in derivatives, 26 billion in spot. You pull up Coinbase, they're doing 6 billion in spot, and that's it. Are you kidding me? They're doing 106 billion versus 6 billion, and Coinbase is the 800-pound gorilla in the room. Not so sure. In one 24-hour recent span, Binance completed $170 billion of transactions. On a slow day, it's doing about $40 billion. In terms of when he created this company, getting down to it, come on. These are the crypto riches. Excuse me while I get it. Here it is. So his road to crypto riches, not that long ago. Shanghai, 2013, friendly game of poker. Bobby Lee, CEO of BTC China, and investor Ron Chow, both encouraged him to put 10%. 2013, not bad. In 2017, folks, it was just 2021. He's got $100 billion from this company he founded 4 years ago. But crypto, it's been quite a 4 years. He founded Binance, and it quickly blossomed into a crypto powerhouse. Top destination for trading alternative coins, altcoins, cryptos that are less liquid and than more established coins. Now, what's really cool here is that they succeeded in creating user stickiness. People in here talking about that they don't even need to be the first one to list something to get the liquidity. Originally, they allowed clients to open accounts with nothing more than an email address, focusing on crypto-to-crypto transactions, and avoided traditional banks completely. They've now gotten big enough. Regulators probably coming for them. In August, the company announced all new users must verify their identity, and existing users who have not will be limited to withdrawals. It's never had a formal headquarters, good old crypto, founded in China, banished to Japan, self-exiled to Malta. Financial regulator later denied having oversight of the exchange. It's the wild, wild west, folks, no matter how you see it. But pretty remarkable when you look at the type of wealth over there. And yeah, $96 billion. The remarkable thing about this was just the pure comparison of the size of this company versus what we know as the juggernaut, which is Coinbase. And you jump over to Coinbase today, I imagine not a good day to be a Coinbase shareholder, and you're talking about down 6%, and you are bumping up against lows, folks. That is from when they went public, right? It sure is. You are bumping up against a critical area for Coinbase right now, as you are now literally at lows since they went IPO. Anybody buying this thing since it's been IPO is going to be in a losing position. Speaking of losing positions, man, we got the S&P down 48 points. Nasdaq 100 down 257. The Dow off 215 now. Stay tuned, folks. Market's accelerating. We'll be right back.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We have Bitcoin back above 40,000, 40,180. A little bit of a pop there from 39,470. S&Ps, not quite the case. You're talking about 50 points on the dot right now. You're down 1.1%. Nasdaq 100 down 1.8% right now. There's your acceleration right on the open. We're talking about right near those session lows right now. Interesting, talking a lot about crypto and a pretty important level that we're trading at. I jump over to Bloomberg during the break, and what do they have up on the front page? Bitcoin. Worst annual start since the dawn of crypto. Like I just said, folks, it has been a tough start to the year for Bitcoin. Backing things up on a daily, you look where we were just to start the year, you were at 47,000. You've given up 20% just like that, let alone going back to where we were November 10th at 69,355. All right, let's jump around to other stocks that are moving to kick things off this morning. We jump over. Yes, we covered Lululemon. Tilray, a little bit higher in the pre-market. Talk about the pot stocks getting pummeled. Reporting an unexpected quarterly profit. Revenue increased by 20% from a year earlier. Strong demand for cannabis profits, although its sales were below analyst forecast. TLRY. Tilray, there's a bright spot in a tough market, up 18.2%. For some context here, folks, you're only back to where you were trading at on Tuesday. And if you look at the daily, not many people in a winning position in this stock that's up 18% today when you look at the demise that it's had. We jump around to some of the other cannabis stocks, though. Cannabis, Canopy, yeah, you're up by 2%, but same exact deal here. You look at this chart. Yes, you're up from an $8 low last week, so technically you're pushing almost, what is that? Same deal, 10% pop from where you were. But be careful of these equities, and I'm a believer in that industry, folks. But man, there is no sign of strength on these cannabis stocks just yet. There's no sign of strength in this market just yet either. Let's jump over to the Qs real quick. Take a look. As I talked about that trend line, the Qs gapping below that trend line that we have been in for the better part of, I want a 5-year daily. There we go. Zoom it in on the run. You're talking about 15, 16 months that we have not dipped below that trend line. Every time we've been down there, we've touched that trend line and popped higher. Not the case this time as we dip lower, 373. Let's take a look at some of the FANG stocks. We'll kick it off with the biggest company out there, Apple, down more than 1% right now. Let's zoom it back in on a 15-minute to see the action. Catching a little bit of a pop, though. Apple, already $2 off its lows on the open this morning. That's an interesting one. Apple, its own animal, as we've talked about before. Microsoft shares on the open, 308.57. Microsoft down another 1.7% right now. Google shares down 2.2% right now. Meta, down 3.1% right now. This market's not stopping. S&P's now down 1.2% at 46.10 on the S&Ps. All right, let's jump around some of the other individual equities. Viacom getting a bid in the pre-market. They get an upgrade at Deutsche to buy from hold. Viacom and Discovery both were trading higher last week. Viacom on the news that they, that new media company, I think it was maybe Friday, there's your pop, that they may combine. They got an upgrade. They got another upgrade. Trade a little bit low with the market. Not bad to be positive, though, on the market today where the S&Ps are down by 56. Discovery was the other one. DISCA is their symbol, down 2.2%, but you see the acceleration Friday. I mean, these companies, there was your pop last week on that news. $29. You was just trading at 23, so that's a little bit of a tough one. But in the long run, I imagine Discovery, that they will be teaming up. Is it with Viacom? We'll have to pull it up. Maybe it was with HBO, Discovery and HBO. But nonetheless, that was the Bill Huang volatility that got it way out of whack. Probably have a future, both of those companies, in streaming. All right, what else we got? Dell gets an upgrade as well. They got a 6-week backlog. Check that out. So outperform from market perform. Bernstein notes Dell's approximately 6-week backlog in its PC business, as well as relatively high mix of commercial versus consumer business. They are a little bit higher in the pre-market. They'll see if they hold them. Up 2.6%. There's a stock for you, man. Holding up well in the new year. You put it on a daily. Yeah, talk about no pain to kick things off. You're up 2.6%. I guess they have 6 weeks of orders. On the flip side of that, I see that, and I'm like, 6 weeks of orders? Who's ordering a Dell computer if they got to wait 6 weeks to get it? I guess some people, but I mean, fortunately, Best Buy's still got laptops and so forth. It's got to be pretty tough to be competing. Says a lot, right? When you're selling laptops 6 weeks out and people are still ordering them in a big way. All right, let's jump around to some of the other stocks. We'll take a look at some of the retail stocks, see how Walmart's trading. Walmart down about 0.5% right now. We jump over to Target shares, down 2.5% for Target. TJ Maxx, TJX, down about 3.4% right now. Kohl's, KSS is their symbol, down 2.3%. Let's jump to the travel sector. Everything's getting pummeled today across the board. American down 1% right now. Delta down about 0.5%. You know what may not be? Let's jump to banks. There you go. JP Morgan, barely in the green as we have the yield at about 1.8% for the 10-year. Bank of America in the positive by about 0.75%. Citi, positive by about 0.2% over there. Wells Fargo, positive by 1.4%. Look at that acceleration in Wells Fargo. 55.54. Look at where it's at. Wells Fargo actually above where you were coming into 2019. Quite the time it took them. Let's back it up even further for some real context here. You are bumping up against the $55 area in Wells Fargo, which may give a little bit of resistance. But as you see, 60 is the upper boundary line. We're almost there in 2015, almost there in 2017, almost there again in 2018, $60. But Wells Fargo, quite the rebound and quite the banner year for them last year on a turnaround from 30, and you're at $55 on Wells Fargo. This market, man, I keep saying it, but it's not stopping, folks. We got 12 minutes left in the program. It's going to be interesting to see where we are by the time we hand things off to our man Basil Chapman at 10 o'clock. Let's take a look at JetBlue to continue the airline for our man White Shark in the Tiger's Den. JetBlue down about 0.2%. You take a look at this thing on a daily. Man, talk about just chopping around. You got some support at about $14 here. You have a little bit of resistance of 16, maybe 16.40. You back this up a little bit further to see some more context here. Now, this Fibonacci line we had took from where the acceleration began in 2020. It's so crazy time has just flown. I was just talking to somebody yesterday. I mean, this pandemic has just morphed the way that you think about time in terms of the year 2020, 2021, and 2022. It seems like they've all just merged together, which is really unfortunate for sure. But remarkable that you got to now go back to 2020 when it's 2022. When we first got the news of the vaccine efficacy, the market takes off. I got a chart of JetBlue up there. You trade up to almost $22. And as you can see, the 618 of that move, it's kind of where it's been oscillating around, right? And that's at about $15, which is where we're at right now. Now, you back this up even further for some context to the move. You trade at $15. You may run into a little bit of resistance at 16. That's the only thing. I've been looking at JetBlue. You take a look. Sometimes areas of support can turn into areas of resistance. You've seen it a couple times. We were up there in October, and we were up there in November at about $16.50. You back things up. That is the area that we were finding support early on, maybe an area we bump up against a little resistance, but nonetheless, on a shorter term time frame, you're at about the 618 level. You could start to dabble on JetBlue right now. You jump over to the Analyze tab, you scroll down, you're talking about a company valued at about $4.8 billion. These airlines, the only thing I would encourage you to do is put a stop in. Put a stop in, make sure you take it, because they are prone to some volatility, and there's nothing to say, folks, that travel, business travel, the world's changing, and they might be in for some tough times in the near future, at least. Stay tuned, folks. We'll be right back to finish up the show.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Are you looking for a secure investment which pays you on a monthly basis? The Tiger First Mortgage Program may be the program for you. The best rate on a 5-year CD in the country right now, according to Bankrate.com, is paying 1% per year or $1,000 per $100,000 invested. The Tiger First Mortgage Program pays 7% per year, paid monthly, on secured, high-value, buildable properties in St. Petersburg, Florida. The investment is for 4 years, paying 7% per year or $7,000 per $100,000 invested. Your investment is secured by high-value real estate in St. Petersburg, Florida. Your investment can be anywhere from $100,000 to $500,000. Do you want to make $1,000 per year on $100,000 invested or $7,000 per year on a secured Tiger First mortgage? The Tiger First Mortgage Program may be just the program for you. The Tiger First Mortgage Program pays 7% per year, paid monthly. For more information, you can call 877-518-9190. That's 877-518-9190.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got the S&Ps down 64 points right now. So much for a slow start to the week. Not the case, man. The market just accelerating, folks. Even the Dow. The Dow was really showing some strength to kick things off. You have the Dow since 9 o'clock this morning. Since I've been on the air, it's traded down about 300 points in the Dow. Dow's down more than 1% right now. S&P's down 1.4. Nasdaq 100 approaching 2% in the negative in the Russell, now down 1.6%. We jump back to Bitcoin, catching a little bit of a pop off that 39,000 mark at 40,805. Cruise at 78.50. You got gold at 17.95. We jump to the all-important notes and bonds, just kind of hanging there at about a yield of 1.8%. We get CPI data this week out Wednesday. That should be interesting in terms of what it shows for inflation numbers. When you look at November's headline CPI, you were talking about 6.8%. That was the highest since 1982. We'll be looking for December numbers, Retail sales are going to be out Friday. And then we also get Delta Airlines. So Delta is going to be out with their numbers on Thursday before the bell. Jump to Delta real quick, as I've talked about some of those airlines. Delta down about 1.5%. And then we kick into full earnings with the banks kicking things off on Friday. So we get on Friday Wells Fargo, JP Morgan, BlackRock, Citi, to name some of them. Going to be an interesting Kickoff, especially with yields coming from 1.5 to 1.8. All the banks kind of coming into that with quite an acceleration. Although look at today, JP Morgan giving it up. I mean, this market just sold off everything. You saw the Dow sell off about 300 points. The banks actually selling off, as everything can't avoid a sell-off right now. Even the banks with a 1.8% 10-year. Bank of America in the red. JP Morgan in the red. Citi in the red. Wells Fargo, not so much, but close. Only up 1% now. All right, folks, stay tuned. This is going to be a great day of action. We'll see. Keep those fingers fast today. Use your stops, folks. Stay tuned. We got our man Basil Chapman coming up live next. We just hit 4,600 on the dot in the S&Ps. Folks, Tuesday we were trading at 48.08. Man, and what are we trading on the VIX? VIX probably's got some good action going right now. There you go, 2194, 2202, the high on the VIX so far. Thanks so much for starting your week with me, folks. Stay tuned. We got live programming all trading day at TFNN. Basil's up next. Have a great Monday, everybody.